In recent months, the UK tech sector has faced a wave of layoffs, and no company has been more impacted than Amazon. Just last week, they cut 14,000 UK jobs in one fell swoop. That's a staggering figure, especially when you consider the once thriving Shoreditch headquarters, which employed 3,500 people, is now down to just 800. Amazon's Manchester fulfillment centres are operating with minimal staff, and their Edinburgh tech hub has completely shut its doors. And Amazon isn't alone. Meta has let go of 8,000 UK employees, Google 6,000, and Microsoft 4,500. In total, 42,000 tech jobs have disappeared across the UK in just the past 6 months. But here's the number that should send shivers down the spine of every property owner in London. Each tech job lost results in an average £12,000 drop in local property values. That means £500 million in property value has been wiped out just from these layoffs. And the worst part, this could just be the beginning. In today's video, we'll break down how these layoffs are affecting London's property market, why this decline is happening, and what it all means for the UK's future economy. Let's start by looking at the big picture. The UK's tech workforce has been shrinking at an alarming rate. Amazon, for example, has cut its UK workforce by 68% from its peak. At its height, Amazon employed 35,000 people in the UK. Now, that number stands at just 11,000. That's 24,000 high-paying tech jobs gone. And it's not just Amazon. Meta, another massive tech player, has seen its London workforce shrink drastically. The King's Cross campus, originally built to accommodate 6,000 workers, now only has about 900 employees. Google's billion-dollar King's Cross office, purchased just 3 years ago, is now attempting to sublease 60% of its space, with no takers in sight. Microsoft shut down its Reading campus, wiping out 3,000 jobs overnight. Oracle relocated its European headquarters from London to Dublin, while Salesforce cut its UK headcount by 70%. It's not just the big players, smaller startups are suffering even worse. Let's focus on London, the supposed European Silicon Valley. In Shoreditch, the once thriving tech hub is now experiencing a 34% drop in property values. In King's Cross, the property values are down by 28%, and in Canary Wharf's tech towers, they've fallen a staggering 41%. These aren't just minor corrections, they're massive declines in areas that were once considered the gold standard for tech innovation and investment. So, what does this mean for London's future? The tech sector has been the lifeblood of these areas. For years, tech salaries drove property prices up, attracting workers from all over the world, and businesses followed suit, eager to get in on the action. But now, with 42,000 tech jobs gone, the story is different. With fewer workers in the market, demand for housing is plummeting. Property values are sinking, and the economy in these areas is contracting at an alarming pace. It's not just a property crisis, this is a full-blown economic disruption. Now, let's bring it back to real people. The economic impact of these mass layoffs goes far beyond the tech workers themselves. When 42,000 jobs disappear from a sector that has become so integral to the UK economy, the ripple effects are felt in every corner of the country. Let's start with homeowners. In tech-heavy areas like Shoreditch and King's Cross, property values are dropping fast. The average price of a property in these areas has already fallen by 34% in some cases, and for new builds, the drop is even steeper, down 48%. In some converted warehouses, properties have lost as much as 56% of their value since peak levels. That's a significant loss for homeowners who were counting on these inflated property values for financial security. But it's not just the property owners feeling the pinch. Renters are also seeing the effects. Premium rental prices for high-end apartments in areas like Shoreditch that once commanded £4,000 a month are now struggling to attract tenants even at £2,000. And it's not for lack of trying. Landlords are offering 6 months of free rent just to secure a lease, but it still isn't enough to fill the vacancies. The rental market, especially in tech districts, is completely collapsed. Small businesses in these tech-heavy areas are also taking a huge hit. The coffee shops, gyms, restaurants, and boutiques that once thrived on the influx of high-paying tech workers are seeing fewer customers. Many businesses that depended on a steady flow of tech employees are shutting their doors or downsizing. The local economies that once boomed from tech investment are now reeling from its rapid withdrawal. These businesses now face a struggle to survive, with fewer people spending money in their shops and fewer workers in the surrounding office buildings. Even broader industries are starting to feel the impact. With fewer high-paid workers, there is less demand for services like premium fitness clubs, luxury stores, and fine dining. Local restaurants that once catered to the tech elite are shutting down, and real estate agents are reporting entire weeks without any viewings. The tech talent that drove this economy is gone, and with it, the economic ecosystem built around it is crumbling. Let's break down exactly what's happening here. The numbers speak for themselves. Amazon's UK workforce has been reduced by 68%, a huge blow to the local economy. When 24,000 high-paying jobs disappear, so does £2.1 billion in annual salaries from the UK economy. That money no longer circulates through local businesses, and it's a loss that doesn't just affect Amazon workers, it affects everyone who relied on those workers for business. Now, Amazon didn't just lay off employees, they also abandoned entire office buildings. Their Shoreditch headquarters, which was once the flagship of Amazon's London operations, is now 70% empty. Entire floors of the principal place building are unused, and the building is a shell of its former self. In Manchester, Amazon's tech hub, which was supposed to employ 5,000 people, now only houses 300. The long-term consequences of these vacancies are huge, not just for Amazon, but for the entire local property market. But it's not just Amazon. Meta, Google, Microsoft, and other tech giants are pulling out of the UK. Meta's King's Cross campus, designed for 6,000 workers, is now only 900 employees strong. Google, which spent billions buying up office space in London, is now struggling to sublease 60% of that space. And Microsoft has shut down its Reading campus completely. This exodus of major tech companies signals a much larger problem for London. The tech boom is officially over. So, what can you do if you're a homeowner or investor in tech-heavy areas like Shoreditch or King's Cross? First, you need to face the reality of what's happening. Property values are dropping, and it's unlikely to reverse course in the near future. If you're planning to sell, now might be the time to do it before the market drops further. But be aware, properties are sitting on the market longer and in some cases are not selling at all. The golden days of inflated property prices in tech hubs are over, and the reality of lower property values is settling in. For renters, it's a similar story. Rental prices are also dropping in tech areas, and landlords are offering more incentives like free rent to fill vacancies. But even with these deals, the rental market in these areas is severely depressed. If you're a renter in one of these tech hubs, it might be worth considering relocating to a less affected area to avoid further rent hikes as these properties continue to lose value. For investors in commercial real estate, it's time to reassess your holdings in tech districts. The demand for office space is drying up, especially for large, expensive office buildings. The vacancy rate in these areas is at an all-time high, and subleasing properties is proving difficult. You may want to diversify your real estate portfolio to include sectors that are more stable, such as residential or industrial properties, or even look into markets outside of London altogether. Looking at the broader picture, it's clear that the UK's economy is undergoing a fundamental shift. The tech sector, which once provided a significant boost to London's economy, is shrinking. This could mean that London will lose its position as the tech capital of Europe, and with it, the associated property market boom. Officials are trying to play catch-up by promoting other sectors like AI and biotech, but these industries can't replace the sheer scale of the jobs and investment that the tech industry brought in. The reality is that London is now facing the consequences of being too reliant on a single sector. With tech companies leaving in droves, the local economy is struggling to stay afloat. There's no easy fix, and no amount of marketing or political posturing is going to reverse this decline overnight. The truth is, London's tech era is over, and with it, the property boom that came with it. How do you feel about the state of London's property market and the collapse of the tech sector? Do you think the UK can recover from this, or has London's role as the tech capital of Europe come to an end? Let me know your thoughts in the comments below. Also, what do you think should be done to address the exodus of tech companies from the UK? Should London double down on new industries, or is it time to rethink the city's economic future? In conclusion, the tech sector's decline in London is a crisis that's only just beginning. With massive layoffs, abandoned office spaces, and plummeting property values, the impact is being felt across the city. For homeowners, renters, and investors, the message is clear: adjust to the new reality or face further losses. The tech boom is over, and London's future as the tech capital of Europe is uncertain at best. Thanks for watching. If you found this video insightful, don't forget to hit subscribe for more updates on the UK economy. Stay tuned for more in-depth analysis on the collapse of London's tech sector.